Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday sell-off edition of Benzinga's Pre-Market Prep. Spencer, Israel, Joel, Elconin, and Dennis Dick with you, as we are every morning, whether it's an up day or down day. Today, certainly the latter. If you have a stock that's up, congratulations, you're in the minority. But everything seems like it's down this morning, especially crypto, which we'll get to. We'll talk target earnings, which is up, but probably not for long. We'll talk Take Two earnings. We got a lot to discuss on the show today. Two guests on the show. Ivan Feinseth. He is from Tigress Financial Partners, which run the show at 8:35. And at 9 o'clock, our big interview with the Jumia co-founder and co-CEO, Sacha Poingnonnec. It'll be me and Chris Kachi from SPAX Attack handling that at 9 o'clock. So looking forward to that at 9 today. Co-CEO of Jumia, Sacha Poingnonnec. Guys, hit that like button for us. That's a great way to start your day, and it takes 2 seconds, and it's a way to show your support. So we appreciate all the likes that we get. I think I'll just throw it open to Joel here and have Joel just sort of take it away. But Joel, it's certainly a morning.
Yeah, good. I'll give you guys the good news. The good news is that I'm not doing that 9 o'clock interview because I would have said JMIA.
Yeah.
I didn't know it was Jumia. Did you know that, Dennis? That's how you pronounced it? I did not know that. Folks,
no idea.
There's plenty of red here. Couldn't opened up, hit the open lower, hit the close. Boom. We're down 41.5 handles. I had to adjust my numbers. I only got 2 numbers on the downside to look at for the remainder of the day. Crude is down $1.49 at 64.01. Crude getting hit. Gold, not a hedge right now. Down $10.01 at 1057.60. Silver, that's down 59 cents. Didn't spend much time in the 28 handle at 27.74. And Bitcoin, I guess we'll talk a little Bitcoin this morning. That's down $4,240 at 38,000. This is called 39,000. Triple D. Well, first of all, I want you to know I have a new indicator.
What do you got?
It's the Triple D 315 phone call indicator.
Oh, yeah, we did. We had a phone call yesterday. When the market was flat yesterday, we were trading around 414 or 415 on the SPY. And I don't know if the whole market is tapping the phone calls of me and Joel Elconin, but I'm just like, this market just doesn't look healthy. I mean, the rotation where it was keeping us up before is not allowing the markets to go higher because there's always something that was falling. And yesterday, the value names, you saw a great run in the growth names. The growth names bouncing back. Even our Marcus, had some love with his ride. A lot of the stuff that had really got beaten up, the Kathy names were bouncing back. But what did they do? They weren't flying into everything. And they were flying out of all the things that had been working. So as much as rotation was, allowing the SPY to keep going up, up, up. Now the rotation is actually holding the market down because they're always selling something. But today, is a sell everything day here, Joel. I'm looking at my screen and I'm trying to find a sector that is green here. Target is the only stock that I'm looking at on. Well, I got Prudential, but I'm sure that's just a tick. Probably it's not really up. Yeah, it's not really up. Target is basically out of the major S&P components, really the only stock that is trading in the green. TGT. Yeah. Ford is trying. Ford is right there. It is flat, but obviously we have EV F-150 day today. But so that trade still working because it's not down. But man, and Take-Two's in there too. CRM too. So there's a few. CRM got an upgrade. Take-Two had earnings. There's a few, but holy mackerel, Joel. What are your thoughts here?
Wow, I don't know where to start. I think what I'll do is I'll start with perhaps a possible reason for why we're at and what's happening in the market. And I was talking to a former big time money manager yesterday, and he has a theory. And he has a theory that a lot of these crypto exchanges are just offering insane margin, right, to trade these vehicles. And what he's concerned about is that, maybe some even bigger players are going into these cryptocurrencies on a heavy margin, and it's not working out for them. So as a result, they're having to sell their stocks. So I think there's one crypto exchange that offers 100 to 1 on trading these things, and we all know about margin and what margin can do to things. So
I have no idea about any of that. Like
100 to 1 margin on crypto.
Well,
so if you're going big into crypto and you're using, and you say, you're having to sell stocks. So that could be, and with the fallout in crypto. But Dennis,
couldn't it just be, Joel, if there's
a
big bubble in everything, which we've been talking about? Couldn't it just be as simple as that money has been, just flying into anything and everything? I mean, we've been talking about, like the question I was getting the last few weeks. What do you want to buy here? What are you buying? What are you buying? I keep saying, I'm buying cash. I've been buying cash for weeks, and every rally, I've been using to lighten up stocks. I did something 3 days ago that I hadn't done in I don't know how long. I sold some of my Qs in my long-term portfolio. I haven't done that, and this was in my retirement account. So I went to the one with the RSP because that's all taxed anyway, so I don't have any tax consequences. I won't sell the Qs outside my RSP because I'm averaged in at like $40, so I can't sell those pretty much ever. But the other ones are in my RSP, so there's no tax consequences because the whole thing's taxed at the end. But I was like, we had that rip and rally 3 days ago, and I was like, this is just stupid. I'm like, this is just dumb money, FOMO coming in. I'm like, we have all kinds of overhead supply on the Qs at 330. And it's time to, continue to lighten up into the rallies, sell the rips. I've been selling rips, and I haven't really been buying dips, although I did buy a couple of stocks. We talked about that, that I took a fly on the U because of Michael Pachter. Had a good day yesterday. But again, it's just the type of market here. Everything is so inflated. It's hard to go and say, oh, yeah, I want to invest in this market. When you look at multiples and you look at, I just can't see jumping in. I was saying even 2 weeks ago, the value stocks are overvalued. I mean, these are value stocks. Yes, Macy's, the PE, and yes, I got that one wrong. People will be quick to point that out yesterday. But I said if it turns around and gives it back, then that trades off. I mean, it's not good that we continue to sell good companies on good earnings. This has been an excellent earnings season, and the market has gone down during it. That's telling you just prices and expectations are just simply too high. And, do we have an imminent crash? No, I don't think so. But do we need a correction? For sure. We need a 10%er. We need like a pullback on the SPY. We're down 3. We need a 10%er really to like shake some people out because everything is inflated.
The one thing I bought, I got my head chopped off on. And
if you buy something, you pretty much get your head chopped.
I know, and I kept on saying, I'm not buying anything. I buy anything.
AT&T.
But how do you like this for an investment thesis? Okay, I bought the T because I like the dividend and it and its value, and I'm going to get a return. But now that they cut the dividend and the stock's gotten killed, I might hold on to it because I think it's a growth stock now.
That's what they're trying to feed you. That's what they're trying to feed you. I have no
Oh,
idea.
man.
You know, AT&T, obviously, Kramer are spot on that. We give Kramer some heat sometimes. We got to give him love and
Nailed
credit
it.
where credit is due. They were all over that. He was all over that they were going to cut the dividend. He asked and got the information out. I mean, it was hidden. You know, the devil's in the details. And the details, you know, weren't very obvious early, you know, 2 days ago or early in the morning because the stock was trading up significantly. But then when you reach down, you see that, you know, their target dividend rate was going to be cut. Didn't say anything about like cutting the imminent cut, just said the target rate was going to go down. And that means they're going to cut it. So great research by CNBC and Jim Cramer on that. And, you know, the stock's been punished rightfully so. But we've talked AT&T at, you know, a lot in the last couple of days. Let's bring it back to crypto because this is really the reason that the markets are down here this morning. This is a crypto overnight. It's pretty much an overnight crash. Can we show her some of these crypto? I mean, I've got a theory. Is that right? It's down 25% tonight.
That's right, Dennis.
Like, I mean, I've got a little piece of Ethereum still, and I have a little piece of Bitcoin still. But I mean,
You talked about selling that yesterday.
yeah, I want to sell everything. I'm like, I can't go off of like complete zero on all this stuff. So I sold a bunch of my crypto. We know when I was trashing it on the Saturday Night Live topic.
What about that? What was that Saturday Night Live?
We kept tweeting about it. That it appeared that was a nice setup for a top, and not just doggy coin, but in all of crypto. The Saturday Night Live topping event. It took a little while. It didn't top right away. It took a little while, but eventually. You know, it does look like that Elon Musk, and obviously, you know, Musk crapping on it, you know, 3 days later really capitulated it now. But I mean, we look at Bitcoin, you look at all of crypto, it's a mess now technically. We look completely broken on all these charts. Is the story over? I don't think it's completely over on all this stuff, but there was so many warning signs, you know, and a lot of those warning signs came from my Twitter feed. I'm going to toot my own horn because everybody trashes me. My haters say, you know, when I was tweeting about selling, you know, and I sold half my Bitcoin and half my Ethereum 2 weeks ago because I was like, I want to hold a little piece yet, but I don't want much exposure here. So I think there's imminent pullback. And I said, I think the crypto market is where the SPACs market was 2 weeks ago. Here's what I tweeted on May the 6th. May the 6th. The crypto market is currently where SPACs were back in February. All froth. I'd book profits now if I were long a lot of crypto. That's why I sold my extra Bitcoin. I bought more Bitcoin. I sold the extra stuff. Everybody's saying I was going to hold to 0 or 500,000. So I kept a little piece of Bitcoin there, which looks like crap now because I bought it at 17,000 and obviously up to 60. I should have sold it all, but I did, and I held a little piece of Bitcoin. But it's so small. There's just so many warning signs. If you load up in crypto, you're seeing, you know, the growth names all get hammered. Well, the crypto doesn't even have, you know, the crypto has no profits. There's nothing there. I mean, was all fraud. And the run was just incredible. The warning signs were all there. Everybody talking about it. I took so much heat. You know, I still take heat. I know I tweet something out and people say I'm an idiot and I don't know what I'm talking about with crypto. But you know what? You don't have to. Here's the real reality. I don't know. I don't sit here and pretend to know everything about the fundamentals of every single stock. You don't have to. You just have to know relationships and identify them. I'm not a fundamental analyst that I'm sitting here and analyzing the balance sheet of General Electric to come up with a price target. I don't do any of that. I know technicals a little bit, and I know relationships. And you know what? That's all you need to know. You don't need to know how all the crypto markets works to make money in it. And that call was just the linkage that I say there's a linkage between crypto and growth names. And eventually crypto is going to collapse like all those growth names did. Eventually it was going to happen. And it did. So, you know, I'm an idiot. I don't know what I'm talking about, but I'm very good with relationships. And those growth names and crypto, there's a relationship there, whether you crypto people like it or not. And it paid. And that relationship paid.
Yeah. Also, technically, Bitcoin, you know, it had that consolidation from 52 to 60 for 11 days. And 11 days of consolidation. There was an event. You know, Musk, tweeted about it. He didn't sell, or whatever. But that broke it out of the consolidation period. Tried one day to get back up. And then this is what you have. So then I talked about this yesterday. Someone tweeted at me, but they deleted their tweet. And the monthly say 34K. I mean, I didn't think it would happen today, But still, and another thing too, if you're dipping your toe in crypto here and you're saying 39,000, this is a bargain. There's people long from a nickel in this thing. There are people, from much, much lower prices that are still going to whack a bid at 38,600. So you talk about overhead supply and things building up. Unless everyone's just getting margined out on this and they're being sold out of their positions. But boy, the path back up, I don't know if Reddit, and we talked about Reddit perhaps turning on Tesla and Bitcoin as well. I mean, I don't know how much shorting they do out there, but a couple different factors. But it's just one day. The market moves. We need a correction. Are we going to take out last week's low? We still got 64 handles to go to get to last week's low, folks. That's a long ways. So I'm not going to get super concerned until we take out that. It's actually 50 handles until we take out 40, 29, 50.
I mean, is this a dip to buy in Bitcoin? Probably, but again, when you're buying on day one after, a move like this, there's often some dust, there's often a retest, usually it just doesn't snap right back. I mean, the warning signs must gave you the sell signal. I mean, yeah, I got lucky maybe with the call and, the setups were there to say, 2 weeks ago that I lightened it all up, and tweeted out multiple times. I probably had a dozen tweets where I was like, I don't like crypto. I don't like crypto. I was trying to warn my followers that I think you should, like I had my buddy who is a chiropractor down in Memphis, and he's just loaded up with crypto. It's just like, phew. I'm like, I think you got to lighten up. I think, this is the time, to start lightening up. And that's why I was tweeting out so much over the last 2.5 weeks. Like I started the little handle Saturday Night Live crypto topping event. I just could feel it, and maybe, I'm not saying I made a lot of money. I didn't make any money. I sold half of it and I still took a little bit of heat on it, but I'm not trying to always to go on my Twitter feed and trying to make money. I'm trying to save people money. We're trying to give, opinions. We're trying to give trading ideas, but when I really get convicted about something, which I was on the Elon Musk Saturday Night Live topping event, like Doggy Coin topped that moment. I mean, it was your classic buy on rumor, buy ahead of the event, and sell on the event. That's what happened with Doggy Coin. The crypto and Ethereum kept going, though, which surprised me, and it kept going for a few days after that before we obviously started selling off. But sometimes there's just, some obvious, opportunities there. It was overdone. There was froth. There was a lot of ducks in a row there for crypto to top out a couple of weeks ago. And I think now you're starting to see some of that money come out. So is there a buying opportunity here? I'm more inclined to buy Ethereum. I sold half my Ethereum. I'll probably buy that back soon, maybe at 2,000. We'll see. But it's an ugly day, so we can let the dust settle. When the meteor hits, boom, there's going to be some dust and stuff. So let's just see what materializes, and then it tries to rebuild its technicals. Wait till it starts going up maybe before trying to catch the falling knife.
All right, real quick, one trivia, then we're actually going to cover stocks. Who is the originator of the Time magazine cover indicator?
Holy Joel, you give hard trivia questions.
Come on. He's deceased. He wrote about this. I guess he'd have to adjust the name now. I bet you Vegas in the chat's going to get it. And then what his theory was is by the time something got to Time magazine and they were talking about it, then that was the top. Come on.
Oh, is this the Barron's cover too?
Well, he called it
Time magazine, Barron's cover. I mean, when stuff gets talked about, we had Chris Camillo coming on. It's the same indicator. Sorry to take your trivia question away, but I'll just go on a little tangent before you give your answer. I'll give other people a time to come up with it. But Chris Camillo, same thing. When they start talking about your stock on CNBC, it's time to hit the sell button. I mean, when the mass media, and these are, smaller names, but I mean, for the most part, when a story gets hot, now everybody knows about it. That's usually when the froth and everything is going to go into it. Oh, I heard about this from my friend. I got to go get into this. Like my buddy telling the story about, grandma coming in with silver and, oh, my grandson says to put money in silver and comes and buys silver at, when it was $49 an ounce, right at the very top, and puts all her money into it. I mean, this is, when you're hearing, this is why I rarely take, our chat's awesome. We get lots of great ideas, but, your friend heard this, or this is a good scoop. I mean, a lot of that stuff just doesn't materialize. It means it's out there everywhere. That's more of a sell signal than a buy signal when your buddy at the gym taps you on the shoulder. Have you heard about this stock, this odd stock? So anyways, let's go back to your trivia answer.
Graham got it. Paul McRae Montgomery.
Holy mackerel. Nobody in here was getting that.
No,
Nobody
they did.
All
They
Benzinga
did.
office was
Gordon
doing
did.
that.
Or Graham, he must be up
Our
around my
chat's
age.
a lot smarter than me and Spencer.
Let's go.
So.
Let's go Target, because I thought the CEO was very modest on CNBC. I think that he just
It's a nice
was
NFT
very
right there.
conservative talking about moving forward. So let's look at the numbers and what Target's doing.
We said Target's going to crush it, and boy, did they crush it. Their Q1 earnings per share was $3.69 versus $2.25 estimate. They beat it by $1.50. Sales $24.2 billion versus $21.8 billion, so they crushed the top line revenue as well. Comps up 18%. They guided comps growth in the mid to high single digits for the current quarter. It was all good as we thought it would be, as we saw from Walmart yesterday. The question now, does the stock hold its gains from this morning is the question.
The obvious answer would be no, but because it's so bloody obvious that it's hard to go short this. I mean, now everybody's thinking, oh yeah, it's up, it's got to sell off, right? So obvious guy says, yeah, short this pop, but I'm hesitant because one, this was a really good quarter. Two, they already did it with Walmart. There's a lot of people thinking that way. There's a lot of people thinking, okay, yeah, and Home Depot, was an obvious one yesterday too, which, man, I take a lot of heat when I give a very firm opinion there, but I'm going to toot my own horn here today again on Home Depot. It's 327 in the pre-market. This is a setup that was a perfect opportunity, a perfect quarter for Home Depot, and it was just too good. It was as good as it gets. Remember that movie with Jack Nicholson? Is this as good as it gets? Home Depot was as good as it gets yesterday. It's off $14 already. It's fallen 5% from where we talked about it yesterday at 327. When I said if I was long it, I even tweeted it. If I'm long it, I'd sell it. I didn't sell it short. I actually tried to sell it short after the fact, but it really went down.
It was weird, man. When you talked about it,
I probably would have taken some heat and not been able to.
You would have gotten hit off the open. I know the way you trade opens. Yeah. And you would have gotten run over.
It wasn't an easy one. Like at 326, 327, we got short in the pre-market. I think Big Bill got short it. Great trade. But we're bouncing around doing a lot of things. I never got back to it until later, and then it was 323, and I'm like, do I short at 323 in the pre-market? I was hoping to come back up to 326 so I get a second shot. Never did, and then went straight down. But I mean, you just got to watch chasing stocks in this environment. It's not it's not the time to chase stocks. With that being said, a lot of people are already now thinking, you got to think what everybody else is thinking. So people are naturally thinking, oh, sell the target pop. So does that mean it doesn't come in today? It was a good quarter. Normal environment, you'd think it would run on it, but we've been in an environment that they sell every good earnings. So I think I'm just out. I'm not going to even make a call on Target.
I'm not going to, you know what? I'm going to let this shake out a little bit. And then when I'm covering stocks after 9, I'll give my technical take on it. What else do we have?
Well, we had Take Two as well, which is a bit of the same situation, right? Earnings were very good. That was out after the close yesterday. The earnings per share from Take Two, $1.40, sales of $839 million. Both of those numbers, I believe, beat the estimates. Let me confirm that. And the stock is up, but it's just a question of for how long.
Take Two in a completely different situation than Target, a stock that's sitting up near the highs. Take Two sitting near the lows. Expectations were lower. The quarter itself actually wasn't as good as you'd think. They actually hit it on the initial numbers. But because the money started rotating into growth yesterday, and Take Two tech, it started rotating into tech yesterday as well. A dip on Take Two was likely going to get bought. I actually tried to buy the dip. I tried to buy the dip. I had it in my head. I'm like, this dip's, it's going to be a buying opportunity. It did. I didn't get it. I was like playing around. It's hard. The one thing is about earnings. I'm like, I'm going to go buy the dip on this, but then I'm so busy. Like I always say, when you trade an earnings stock, you can't have anything else going on because you got to babysit that thing. And even if I make money on Take Two, I'm buying an earnings dip, it probably costs me money overall and an opportunity cost because I can't trade 10, 20, 30 other stocks, doing different types of inefficiency trading when I got to concentrate on an earnings call. So it's tough, and that's the same reason why on a Home Depot, it's like, okay, well, I had 102 positions going into the open yesterday. Do I have the time to babysit Home Depot? Probably not. So, I mean, this is, and you say, how do you baby? I said 102. Well, I'm avoiding news. So they're moving more with the market as opposed to, moving on individual company news. You get those individual stocks. You're trading 1 or 2 stocks. You can trade these earning stocks. You can make calls with this. But once you get over 5 to 10 positions, you got to be in some slower stuff because you get in that fast stuff and it's tough to trade. Those earnings swings are wild. And you can lose a lot of money in a hurry if you're on the wrong side of it. So you got to babysit those positions, and they're tough to do. But Take-Two, the reason I think it does hold up today is it has been oversold. It is one of those tech names that they were piling into. Kathy had a really good day yesterday. The growth names have turned. I think on the dips today, I think I'm looking at adding a little bit more of those growth names to my portfolio, the beaten down ones. Like, I was looking at Fastly. I have it on my list, literally written on my list.
It's been on my list since 60.
The $40 level's trying to hold. We get a dip here this morning. We had a big director, that went under the radar, I think about $20 million worth about a week ago. So there is insiders that are buying here Fastly too. The thing's been absolutely hammered down from 120 to 40. Is it still overvalued? Probably. But is it oversold? Definitely. So is there an opportunity for this to eventually get a bounce? I think if the market goes to turn, I think it will be those higher growth names that lead us out of here now. I think the value market rally is peaking, or if it hasn't already peaked. So trying to reallocate a little bit of my swing trading. I'm trying to do some swing trades on the long side still on a few. I think Fastly sets up not bad from 40, but going back to Take-Two, I am long Take-Two in my long-term account. I'm sticking with it. I don't think it gives it back here today. I think it comes in a little bit, but I think it gets met with buyers. So 169, 170. Right. Actually, if I didn't own Take-Two, I'd probably be buying Take-Two. Activision has held up well since its earnings as well. So I think the gamers, I still kind of like them in here.
Couple different things here. If you were trying to buy the dip and you were looking for that former low of the move, which a lot of people were, 160, 133, no can do. You had a low here at 160, 170. So if you're holding out for that, you didn't get it because it made a low at 162.58. So now you're that far off the low. You're going to be, I agree with you here. You're going to back and fill here. You're going to find buyers. I missed the bottom. I got to buy today. But for me, my level, a while ago, I gave you guys a level in Penn. And I know Bill Big D listened. And the thing was hanging between 100 and 110. And I'm like, if this puppy doesn't get through 110, it's rolling over. You saw what happened. I got a similar level for you here. In Take-Two Interactive, 176. I mean, you stopped here this many times, 1, 2, 3, 4, 5, 6 days in a row. You're coming up into the report, $4 higher. Yeah, up $8 on the day. Maybe it won't happen today, but long term, man, that's your level. Get over 176, hold 176, and then boom, I think you see 185. So if you're long this, you're looking for a target over the next couple of days, that's my number for you. You can make that a 6-star.
6-star? I didn't know 6 stars existed.
I didn't know that existed either until just now.
Well, you thought it stopped at a 5-star?
Yeah, I thought this
actually back when Joel used to do the S&P sheets for us in the Bright office. He'd have like his 1 star, which isn't a very good support level, and 2 stars. This is for the S&Ps. And then he'd have like a 3 stars. And if he really liked a level, he'd put like 25 stars, just like stars all across the bottom of the page. It was like the biggest level. And he had this printed out for everyone. This is how organized he was as a trading manager of the Bright trading office. Everybody had that when they came in their office, and sat at their desk at like 9 o'clock. They all had their S&P sheets with all the support and resistance levels, all the stars all over it, Joel's star system. But I tell you, when I saw one of those 20-star lines, I took note of that one. So it actually goes much more than 6 stars, Spencer.
I thought this was like the hotel system, like it kind of stops at 5, but
Yelp.
I guess not, or Yelp. Yeah, it's better. We did have a couple other. I don't know if you want to go into earnings this morning, but we had TJX is out. Of course, their numbers were good, and I think that stock might be in the red now.
It is. It's in the red now, unfortunately.
Right. Yeah. See, we had JD. We had Lowe's this morning. You want to go Lowe's? I mean,
I just want to say different. With Target here, it's up at all-time highs. I mean, right? people taking profits a little bit different. I think Target's at all-time highs too, but TGX, new all-time high yesterday. People that bought it at 75 scratching their head.
It's all these stories are just like Dillard's. Somebody was pointing out on CNBC yesterday correctly. Like, what the hell, man? Are you serious with Dillard's?
That's what we were saying. What the hell?
Was that? Were we saying that? Was that? Oh, I was giving CNBC credit. It was us saying it. I forget what I say. But give me a break. Dillard's running 40% in 3 days. I mean, this is just stupid. This is stupid too. I mean, have you went in those Dillard stores? I mean, they're huge stores. This is mall-based. This is what we hated. Back before COVID started, we all had in our heads that, the mall was dying. And, this was one of these are like the big stores that basically, are the whole mall, like they're the centerpiece of the malls. They're huge stores. Brick and mortar. You don't get more brick and mortar than Dillard's. There's so much brick and mortar in one of those stores. Now they're buying these all to all-time highs. This is a bubble, man. If you're hiding out in Dillard's, holy, it's bubble. Do you know what
the big catalyst on that, the extra boost on earnings, Dennis? You know what they got?
I would have thought it'd be Reddit. I would assume Reddit was on this. Maybe it's the new GameStop. I don't know. And that's why I won't short it.
Share buyback, Dennis.
It was a buyback, yeah.
$550 million. They were going to the market. I know you hate when I say this.
What's the market cap? So to do $550 million buyback, let's just do fun math. Let's take our CFA hat.
Let's do math.
Let's do our CFA hat out here. So they do a $500 million buyback. So that's significant because the market cap's only $3 billion. So, okay. So $500 million, if you wanted to do, that's 10 or 15%. Now that's a good buyback, actually. I didn't think the market cap was only $3 billion in Dillard's, but I don't know. Like, it's around 40% now. Is it priced in? You bet it's priced in, but you know what? These things can continue to go. That chart, you never short rocket ships, and that's full rocket ship mode. That could be like 170 on your, so you can't short it, but if you're in it, sell it, in my opinion. So I'm not shorting rocket ships. I don't get paid to short rocket ships. I get paid to short stocks that are weak, relatively weak, not stocks that are exploding, but holy macro, man, that is a long-term gift in DDS. We'll look back at DDS at 141. 2 years from now and say, what were we thinking?
Maybe in the same way we look back at Viacom now, like what was it? I mean, we know now why it was up, but it's kind of the same thing. It's like, seriously?
You got to sell your peanuts. When you get gifts from the market like this, you take the gifts or the market will take them for you. I say that all the time. Viacom from 50 to 100. We hated Viacom. The market hated Viacom for a decade. Look back, Viacom, CBS, you can't see back because they did the merger, so you can't see past 2019. But, I mean, for years, Viacom's been drifting down. It's old school media, nobody, the billboards, everything else. And I joke, but, they do have billboards. I mean, everything's moved to, different types of advertising mediums. And, then there's Viacom, and it's like all of a sudden we're like, oh, no, Viacom's back, value's back. We'll take it from a PE of 8, which was too low, to a PE of like 35 or 40 above the market. Okay, well, that's getting stupid because this company's not growing. So it implodes in literally the fastest implosion I think I've ever seen. Full disclosure, so I'm actually long Viacom now. I've actually bought it down here. I took a piece, and I'm actually down in it, so don't get too excited. I bought
you and everyone else.
I bought a 42, and it's a 40 because I thought, there was eventually going to get a little bit of a lift. It hasn't gotten any lift whatsoever, so I might just cut bait with this thing eventually. But I don't know. It's come down to a point where I don't think it's ridiculously valued here again. But at $100, what are people thinking?
Did Spencer Turnbull throw a no-hitter last night?
Yes, he did.
Oh, my Lord. Another Spencer. I'm going long Spencer.
Spencers are hot. We're going long Spencers.
Time. All right, you know what? Let's bring on our first guest here 1 minute early. Ivan Feinseth, partner and CEO at Tigress Financial Partners. Let's get Ivan's thoughts on this market. Mr. Feinseth, good morning, sir.
How are you?
We are doing excellent. Oh, you got the screens. You got the map. You got the Bloomberg. He's ready to go.
We got Ivan on the screen?
There he is.
Where? Ivan! You haven't done that for us before. Thank you.
How are you guys doing?
So the sky's falling, Ivan. What do you do? The sky's falling.
I think we're still in a bull market. So the dips, you got to buy the dips.
I knew he would say that.
Well, I think you're right. I think he's right. I do. I've been bearish talk here for a little bit here because crypto imploded today. But what's really we still have the Tina problem, Ivan. Where do you go? I mean,
exactly.
cash is hurting us with inflation significantly. So I just think some of these bubbles come out, some of the froth comes out, and then I think you reload some of your stocks.
The bubbles always burst. However, as I said, we're in a bull market. We're heading into a global reopening. We're getting over the pandemic hump. There is huge pent-up demand for consumers to spend, to travel, to go out to restaurants, to interact. We are going to operate more efficiently. People will go to the office, but they'll also work from time to time at home. So efficiency has improved. There's a lot of opportunity, and I still say the Fed is on the side of the bulls, and they want to be up behind the inflation curve because inflation is not their focus. Growth, economic growth, and job growth is their focus. And I will tell you that Fed Chair Powell has been, in my view, the best Fed governor we have ever had. He is clear, he is concise, he takes action. You don't have to read between the lines. And he's steadfast, and he has been right. And he has, I believe, single-handedly saved the world last March when he took dramatic action. And he has been right. He understands markets. He understands business. And I'm going with him. And he is on our side. He's on the side of the bulls.
He likes to hand out cash. So, if he continues to be there and handing out cash, it's hard to fight the Fed.
Well, exactly. But I don't think he likes handing out cash. I think he likes doing what is necessary.
Okay.
I mean, if you look at his background and his bent and his business focus, I think it was very hard for him to just endlessly hand out cash, but it was what was needed at the time. The fact that last March, in March of 2020, he cut rates dramatically, he took dramatic action, which forced other Fed governors around the world or central bank heads around the world to follow him, is what saved the world from falling off an economic cliff. Okay, now we have rebuilt, we are recovering. Thank God for the vaccines. And again, companies like Illumina made the vaccine possible. Back a year and a half ago, they were saying it would take 3 to 5 years to have a vaccine. The company Illumina that does genomic mapping enabled the creation of this messenger RNA vaccine technology, which got us this vaccine in less than a year, and it's why it's 90+% effective. That also has saved the world. We are coming back strong, and you can see it in retail. There's huge pent-up demand. People want to get out to the mall. They want to get back out to restaurants. Luckily, restaurants were able to save themselves through takeout and delivery and eventually outdoor dining and scaled in reopening. In fact, today, New York City has lifted their curfew and their capacity restrictions. So slowly around the country, we are moving back to a more normal level. And hopefully by July 4th, we will celebrate our independence from this pandemic.
So Ivan, just like you look at this market action right now is like just normal market correction behavior, right?
It happens. Stocks, they don't go straight up. And what would be the fun in that? And things get overdone. And then on both the upside and the downside. So you want to buy the dips of when good companies sell off, it's time to buy them.
Okay, yeah, you're typically, one of our more bullish guests, and I wouldn't expect anything otherwise from you today. Is there anything specific though on your radar as far as sectors? You said good companies. What's a good company?
Semiconductors. The semiconductor sector has gotten pounded, yet all we hear is that there's a shortage of semiconductors.
Good point.
So companies like Intel, I think, is a buy, especially Corvo.
I bought it too.
Yeah.
Corvo, Skyworks, Qualcomm. They're saying we have a shortage of communication semiconductors for automobiles. Okay, these are the companies that make those and make the communication components that allow this connectivity. So I think that there's a huge buying opportunity in the semiconductor sector, and including Applied Materials, which makes semiconductor production equipment. You have all the semiconductors announcing huge capital expenditure investment projects to increase their production capability, their production capacity. So again, you saw a huge pullback in applied materials. Makes no sense. So I think the semiconductor sector is a huge buy here.
All right, we're on the line with Ivan Feinseth, managing partner at Tigress Financial Partners. All right, so you helped me out. You're keeping me in my Intel, but what about my AT&T?
I liked the announcement of the deal.
Oh, we did.
I am disappointed about the potential dividend cut. However, what's interesting and what I've been thinking about, I've been a bull on Intel. On AT&T. I've had a buy on it, and I've loved the dividend yield. And I figure eventually, with the growth in their 5G network, the wireless business, their FirstNet responder business, they got so many good things going on. Eventually, the stock would start to move higher. And meanwhile, while you get paid a nice, at one point it was almost 7% dividend to wait. And the stock hasn't performed in several years. So in theory, maybe cutting the dividend may be also another catalyst that drives growth. However, I do like the fact that they are now trying a new way to monetize the Warner Media assets.
Yeah.
I mean, you would think that there would have been no better synergy of content and distribution, yet in almost a 30-plus year history, we have seen no benefit from that marriage. So maybe it's better. The only one that's doing it right really is Disney. Disney has shown that they have launched. I love Disney. I love Disney Plus. I think the recent weakness in Disney is a buying opportunity. But the merger with Warner Media's assets and Discovery creates a great product. I think Discovery Channel, the Discovery Company has great channels, great programming, and obviously Warner Brothers and Warner Media has great programming as well. And indications say that consumers will have an average of 3 or subscribe to an average of 3 streaming services with somewhere's a budget of $30 to $40. That would enable you to get Disney, the Warner streaming, the HBO Max, which is currently called, and Netflix. So you can get a lot of content. And even though people go out, they still, everybody has shows that they like. There's time to go out, but time to stay home, and people are watching all kinds of streamed content.
All right, Ivan, is there anything you don't like then? maybe we should have started there.
Well, yes, but I tend to think about what I like and don't really spend much time thinking about what I don't like. Well, I am. Yes, I am. But I mean, I focus on the things that I like and why I like them. So it's hard to just come to mind quickly of what I don't like.
Okay.
But because I like certain aspects of retail, I certainly like the technology sector. I don't like commodity-based stocks, and I agree with Powell that these spikes in inflation are caused by the breaks in supply chains that we saw during the pandemic. We had factories that were closed down. At the same time, we've had spikes in demand for housing, which drove up the price of lumber. There's also a lumber labor and import issue out of Canada, which has caused a spike in the price of lumber, which should be relieved. So I tend just to focus on the areas that I like.
Okay. Ivan, one more for you. What's your price target on Cat?
On Caterpillar?
Yeah.
Well, we are just starting to roll out price targets, so I haven't done Caterpillar yet. But again, I'm bullish on Caterpillar because I am bullish on infrastructure. And I like, again, we need to fix our roads and bridges. But most importantly, the reason I like things like Skyworks and Corvo is that we need to enhance our communication infrastructure, which we are going through this high-speed 5G network rollout. Also, the power grid. I mean, the power grid is 50 to 70 years old in a lot of places in this country. That's why we have endless power outages and why people are buying things like the Generac generators and also the Tesla Powerwall and solar panel. So I think that Caterpillar is a key component in this global
Keep an eye on
infrastructure build-out.
245, Ivan. You got 3 highs over 245. That's the all-time high. So the longer it takes to get over there, might roll over a little bit, but just keep an eye on that $245 area. But
the other thing about Caterpillar is that they are dealing with record low dealer inventories right now, so they're working hard to build up the inventories so that they have product to sell to meet this upcoming demand.
All right, Ivan Feinseth, partner and CIO at Tigress Financial Partners, joining us. Bullish as always, Tigress.
Oh, man.
We appreciate your never-ending glass half full.
He's been right.
I know.
Markets are near all-time highs. Ivan's been right.
Thanks a lot, Ivan.
Thank you.
All right, man.
You know, when I go through like the guest scheduling and everything, you never know like what the market situation is going to be on the day that you bring in a particular guest. But I will say I have the uncanny ability to bring on great guests at
We're really
great
tooting our own
times.
horns today.
I really do.
It's because we take so much heat and everybody tells us how stupid we are that we got to talk ourselves back up, or otherwise I'd have no confidence to even trade today.
We're just acting
Jeremy
like
Newsom,
normal
pat yourself
financial
on the
media.
back.
We're just being normal financial media, tooting our own horn.
Yeah. Okay. Enough tooting our own horns. We get a lot of things wrong too. We know we do. So let's go though. We're going to talk stock talks. Let's do some ticker time.
All right.
No, it's only 8:46. We got
started
early. What else
early.
you got on the dock?
Well, there was a couple more, and this was also in the chat, so we checks both boxes. But Futu Holdings, this is a Chinese retail brokerage, had earnings this morning. Absolutely like ridiculous growth year over year. Their EPS last quarter was $1.03. It was 16 cents a year ago. Their revenue last quarter, $283 million. It was $63 million a year ago. So ridiculous year over year growth. FUTU is your ticker. Is it in the red now for the morning?
Yeah, it is in the red. Was it up before, Joel? Has it already given it all back? Yeah, look at this. Selling the rips are just working, man. As much as buy the dip worked in 2020, sell the rips work in 2021. You're selling rips, you're happy. It's like, I remember I was saying in 2020, every time I sell a stock, I regret it 2 days later. Every time I buy a stock right now, I regret it 2 days later. So, I mean, selling the rips continue to work. Good job this morning, whoever was selling at 130, 132. It's come back in. I know nothing fundamentally about this company at all, so I can't comment on that. It's tough for me to even comment. Yeah, it's got good growth. I'd say got the double bottom down at $100, but, you know, it's not good that it gives it all back.
I couldn't buy this stock for one simple reason. I mean, it's not a good symbol. Like, why would you want to have a symbol like that?
FUTU? Futu?
Yeah.
I don't know. What's wrong with it?
What's wrong with Futu?
I don't know. Also,
say it 10 times really fast.
Futu.
All right. All right. I guess you don't get it. All right.
Moving on. That one went over me and Spencer's head. Moving on.
Spencer got it.
I'm not quite sure if I ever get it, but
we go back to House of Mouse. Disney, I'm not in it yet. I'm looking at this 160 and thinking, man, we might just test that January low, and I will put my order out there. 161. I think Disney, if you get the shot $6 lower from here, you take it. So I wanted to buy Disney at 170. We had Tim Quast come on the show, saved me 4 points so far because I was going to buy 171. It's 167. Tim said, hold on. I'm not going to be able to hold on if this thing goes to 161. I'm telling you, I'm going to be putting him.
We got Joel's level, so now we're doomed.
Yeah, 169 is now resistance. It was support. Held it almost 3 days in a row. I'm really torn on the House of Mouse. And, you know, Dennis, you kind of had me convinced a little bit the other day when you talked about the March lows. Because, I look at that chart and I'm like, and you're like, hey, you got to throw out the March lows. That's like,
well, January lows in this case, but yeah.
It
did bottom in March. It actually was in January for Disney.
Well, I'm talking about last year, man.
Oh, you're going whole March the other. Oh, whoa.
Yeah.
You're talking about where we were when we were in March before COVID started.
No.
The March lows of 2020. I'll be more clear.
I got to throw all that out. $80 doesn't count anymore. It doesn't exist. I've put all of like those lows as a one-time event. I don't even consider those on the chart because that was just a gift. We didn't know it at the time because we didn't know it was going to happen. But, you know, to go and say it's going to ever test 80 or 90 or 100, unless we get another huge pandemic, it's not. So, yeah. I don't know. So, what was your point?
So because I still look at that run from over a double, a double and a half up to 200, and I just think of all the years Disney's been trading, right? When has it had that kind of price action? Even if you throw out the 80 low, and even if you could just go from 100 to 200, and all the years of Disney, I mean, this was a pretty steady march here, right? I don't think 170 is cheap. I don't think 160 is cheap. I don't know. Maybe if it came down to this area here, you struggled at 153, 154. You had the pandemic. You came back. You paused there. You came back, and that was the monthly low. So I just don't know. I just don't know if it's got too far ahead of itself. And the other thing, too, is do you want to be long this stock the next earnings report when they give you disappointing Disney Plus numbers? If maybe it's not going to start going down, but it's going to flatten up. So the street is going to take that, and they're going to do what they did with it at the last earnings report. So
I want to know if Dennis is selling his forward today.
Of course.
I don't know. I had extra shares that I already sold last night. But I'm
no,
in
we
from
can't
$7.
because you can't have any more cash in his portfolio.
What's that? What are you saying?
You can't have any more cash in your portfolio, so you
That's the
can't
problem
sell this.
too. I keep selling into these bloody rallies, and I'm like, oh, like I at a certain point, I am getting uncomfortable with having this much cash.
You have an event today, though, but this was the plan. You're messing with the plan.
I was supposed to sell into the plan. I had extra shares.
Come on, man.
I bought extra shares.
What movie's that from?
12/22, 12/23 the last night. I'm messing with the plan. You're supposed to sell in the event. If I had for it as a short-term trade, yes. I'm in it for the last year and a half. I'm $7. I honestly just don't feel like paying the tax on it, to be honest.
No, the old tax.
Bad reason to hold a stock.
Spoon on the lows, folks. We're on the lows of the session. 74 even. Minor number in this area, but I don't want to give you a minor number.
They're seriously like I'm looking the same bloody.
Did you see
stocks.
Bitcoin, Dennis?
Yeah.
Where is it?
It hasn't stopped.
It just hit my 30. Well, it did hit 34,000 yet.
Did they halt it? It hit a circuit breaker and it's halted. 34,000.
It hit 30.
What's the Mara? Should we look at the Mara and the riots? Oh my gosh.
Sure, BT, sure. All
Mara, new lows of the move, riot, trying to make new. Well, not quite riot. Holy. Wow, these things were so awesome at one time. They're not very awesome now. BT is another one. Coin, holy mackerel, coin down another 18 points here. At a certain point, you're going to capitulate. Is this capitulation day for some of these stocks?
I got to get rid of these lines.
What about MSTR? That's another one too. MSTR, 433 from 1,300. Bag Holder Central, all these stocks probably going to be tough sledding to come back.
Look at all this red on the heat map of the crypto.
Ethereum's down 40% today. Is that right?
That is right, sir.
In one day?
That go look at
How do you invest in this stuff? I have like an Ethereum. I put like 0.1% of my net worth in it, and I'm probably down big money because it's like down.
I sure hope
day it's down 40% today.
It's down to 2,100.
I sure hope Nick is not trading his plan today.
What's wrong with this? This stuff here is this is gambling, man. It's down 40% one day. I'm mad that I own a little piece of it. I sold half.
It's a smaller piece now, Dennis.
It's basically you might as well forget about it. It's got nothing left with that. So
yeah, Doge is down 51%. If you care about that.
At 0.04689327
51%.
Doge is down 50% today
in the last 24 hours.
Okay, this is not just a crypto.
We shouldn't laugh. We should not laugh because people are losing money.
This is a crypto crash. You know what, though? This stuff here, yeah. Okay, we shouldn't laugh because there is some people losing some serious amount of money in it. If you've got your money in Fugazi, which is what all this stuff is, and you're putting all your money into it, you've got to know what you're in. This can go anywhere. It's just numbers. Nobody can value this stuff. There's no way to value it. There's no cash flows. So it's difficult. I do like Ethereum. So I said I liked it at 2,600 about an hour ago. It's 2,000 now. Am I going to buy more Ethereum today? Maybe I will actually buy the piece that I sold just to get it back. I like the Ethereum better than the Bitcoin, but this is all just tough. Mitch, what are you saying? You just hid in the background here.
He hides on days like
this.
This
Is
he doesn't know.
I don't think
Mitch has been all
Mitch
over.
is under his desk.
Mitch went 100% cash. He's been all over this trade.
You know what?
I actually have been. I've been just dipping my toes in the growth names. I'll play them just for the morning rip, but then I'll sell immediately into the morning rip.
Can't hold them overnight.
No.
Over the minute.
How is Ethereum down 40%? What happened?
We missed your coin. We were just about to bring out your coins, guys.
Oh, these are our
just
coins.
about to
Do you
bring
want to
out your
invest in the
coins.
pre-market?
You know
prep
what?
coin?
I got a level for you folks in Bitcoin.
What do you got?
20K.
What are you pulling?
That's where I originally bought them.
That's what I'm thinking.
It's going to give it all back.
Where are you pulling that from?
20K?
What?
Spencer?
No,
Dennis, tell him why I said 20K.
Yeah, 20K was the original, like in 2018 or 20.
That was the high.
And
then it came down.
Yeah, I remember that.
It's going to
then it
suck
broke
for me
out
if it
from
goes
there.
there and I give it
Come
all
on.
back.
We're at
Yeah,
30
20K.
we're at 32,000 right now. Come on, 20. All right.
Hell, it was it.
What do you mean you're at 32? Stop. We were at 34 like 2 minutes ago. We're 32 now?
I don't know. I know.
Did we just lose $2,000 in the last 2 minutes?
I don't even know where my cost basis is.
Sell!
I don't know where plus basis is.
I have no idea.
Joke. It was a joke. I honestly, this is just, I don't even know.
Dennis is at a loss for words.
I was not laughing about this a little bit, but now I just found out half my Ethereum went down 40% today. I'm like, whoa, that's not good. That's investing in crypto. I don't know about this.
Call Ripley. Dennis was at a loss for words. He started to say something, and then he
I
stopped.
thought you meant it was down 40% from the highs. That's down 40% today.
And for
What is the catalyst? Why is Ethereum down 40%? Do we know?
Is there
Besides everybody hitting the exit button at the same time?
Is there ever a real reason in the crypto market for anything?
2 minutes.
Serious question.
2 minutes. This is a 15-minute chart. Okay, I'm exaggerating. Let's go to a one. Where's my 1 minute chart here? I just want to see how much value the crypto lost in 1 minute. Let's see here. 35. Oh, that's not too much, right? 35.5 to 32.5. Now getting a little rebound there. Holy mackerel, what a move in crypto. All right, 3 minutes left. What else you got on your list, Spencer?
Oh, nothing really. If chat has any questions, drop them in. We'll do a couple minutes of ticker time. But we have Sacha Poingnonnec coming on in at 9 o'clock. He's the co-CEO of Jumia. And actually, before we bring Sacha on, I haven't done a like push today. Let's get some likes. I mean, look, we're all down in our portfolios today.
Likes us today. We're arrogant AWSs.
Is that what they said? I'm not
from Ann Arbor.
surprised.
That's what they call everyone in Ann Arbor.
Oh.
All right. Well, look. No one likes this market, but you can like our show anyway. So hit that like button.
Oh my Lord! Look at the spoos. Dennis, do we have a chance to hit one of these 5%ers
I'm pulling
today?
my bids pretty soon. Cancel all orders. I don't even have very many bids out there, but I just got hit on some XOP. So I'm
and
like,
look
okay,
at the
maybe
correlation. Dennis, you talked about this before. Look at the crypto spook correlation. It's almost like people are puking out the market because they have to meet their crypto margin.
If you've got certain things down 40%, there's probably something to that, Joel. I mean, you got crypto getting hit that hard. This is, don't kid yourself. This buy sell off is crypto. When you have a crypto market imploding like that over a 24-hour period, it's going to have ramifications and everything. So it's not surprising at all that you're seeing the stocks and SPOOs roll over here significantly because there's a lot of money in crypto. A lot of money just got lost. A lot of money got lost right there.
Yeah. And
you still have any crypto left, Spencer?
I've got Bitcoin, but remember I said I never got around to buying Ethereum. So for me, this is not.
I think I actually might buy some Ethereum on this pullback.
Hell yeah, I'd buy some today. I never bought it before.
I sold half of it. It was like 3,700. I think it went to like 42 or 43 though. Like I sold early. I bought it like 2,300, and a week later it was like 3,600. I was like, I just made 60% of my money a week. I'm selling half, and then it went to like 42 or how was the high on Ethereum? 4,300.
Let's look.
Oh, like, holy, that was a bad sell. Would have waited 3 days. Would have got like 20% more money.
Dennis, you can't have bad everything.
I'm sure you can.
I have a bad P&L going today. I'll tell you that. Like, I thought it was hedged, but I got some stuff getting hammered here today on the overnight account. What was Ethereum high?
40.
Look, Target coming in. Target's coming in. I don't want to say anything.
I think Target's going to hold up. I think it's going to close green.
Wow.
Well, everything else goes red. That's actually a bold call.
Wow, man,
I think Target could hold up, but I don't know if we roll over on everything. This is not setting up well. I'm ready to cancel all my bets. Not joking.
All right, Joel and Dennis.
Cancel them about an hour.
I should have. Yeah.
Joel and Dennis, do either of you have any final thoughts besides maybe buying Target? I don't know. No,
I'm not buying Target.
Dennis, good luck. Good luck with your Oilers tonight, man.
Oh, yeah, look at this representing. It's Connor McDavid Day. Let's go, Oilers. All right, I'm out of here. Sorry.
Yeah, I'm going to stay on for a few minutes, folks. I'll do a few levels, man, but this is a tough market. So it's for informational purposes only.
I say that every day. All right, let me bring on my man, Chris Kachi. Today is the crossover event of the century. It's what they're calling it. Chris Kachi, co-host of SPACs Attack. Chris, good morning.
Good morning, Spencer. What's going on?
Pleasure to see you this early in the morning. I don't you typically see you this early, but
the crossover event of the year, you called it.
That's what they're calling it. All right, let's bring on our special guest here, and we can get to some questions that we have. We'll get to some questions from the chat. But Sacha Poingnonnec is the co-founder and co-CEO of Jumia Technologies. If you don't know the symbol, it's JMIA. Sacha, good morning. Thank you for joining us on PreMarket Prep.
Thanks, Spencer. Nice to see you and great to be here. Thanks for having me.
Thanks for coming on. So let me just start with this question. I think most of our listeners are aware of Jumia, your e-commerce, and a little bit more for Africa. For people who don't follow that market super closely and the current events there, can you just from your vantage point outline the current situation in Africa as far as lockdown and reopening, and maybe how that differs from us here in the States?
Yeah, I mean, it's the situation is very fluid. In Africa, there's never really been in most of the countries like a real lockdown as we know it, right? As we've known it. And so there've been some instances of true lockdown, but most of the time it was like some type of movement restrictions for people. The most common one being curfew, right? So people being prevented from going out at night and those kind of things. But for the most part, it was, stores were open and people could go on with their lives, I would say, with some movement restrictions and curfews, especially.
Okay.
And at the moment, you've got like the situation varies by market, by country, but it's pretty loose right now. And there's some level of restrictions, but most of them have waived.
So one of the biggest things that Jumia has going for it is that you're the market leader in Africa for e-commerce, right? Can you explain maybe why Africa is such a difficult market to penetrate? I mean, you've done it, but Amazon hasn't, Alibaba hasn't, Mercado Libre hasn't, all these other big players in other continents. What makes Africa such a challenge?
I think what makes it very special is that you have in Africa probably a very unique situation where the distribution of goods is just the most difficult in the world, right? And notoriously, you have very few stores, you have like infrastructures, which I would say make traditional retail very difficult to grow. And historically, you had probably less internet penetration, right? So when you were looking at Africa, you were seeing maybe a market that would make it very difficult to operate an e-commerce business. And for e-commerce, you need good logistics, you need payment, you need the seller base, and so on and so forth. And I think with the rise of the mobile, and we were able to say, look, now people are online. And so if we can overcome the building a marketplace, building the supply, if we can overcome the logistics and the payment, then we have a business that is going to be very relevant for consumers because, there's less retail in Africa, so it should be very relevant for them. And so we started with this idea and we put a lot of effort in building that marketplace, the payments and the logistic. And now that we have the platform, up and running, we're in a very good situation because it's obviously very hard to replicate.
Awesome. I'm going to jump in here, Sacha. So one of the questions I have is about the balance sheet. So Jumia has raised over 500 million in the past 6 months to strengthen that balance sheet. What are your current plans for that cash on hand with the balance sheet going forward?
Yeah, it's a very good question. At the moment, we're very focused on the core business. And by core business, I mean our existing countries. You know, there are 54 countries in Africa, and we're present in 11 of those. And those 11, they represent something like 70% more or less of the GDP and the population and so on. So we're quite focused on those, right? And then we are very focused on building our core offering on e-commerce and food delivery. Right, so developing further those services. And the third aspect, of course, is Jumia Pay, which for us is a key priority to drive the penetration of our payment offer and our payment system within our existing consumers, and then gradually expanding it to third parties. So it's really focusing on the core, continuing to drive the core and accelerate the growth, continue to drive the business towards profitability. And from there, once we have achieved those objectives, then we may venture into more countries. We may go into more, business development opportunities. But for now, it's very much on the core: accelerate the growth, accelerate Jumia Pay, and continue to drive the path to profitability.
Perfect. So you recently reported first quarter earnings, and we'll dive in a little bit to revenue and profitability later on. Question I have for you is some of the other metrics. So do you see growth accelerating for new users, average transaction size, and number of transactions to continue going forward?
Yeah, at the moment we have taken a few years ago we made a choice to put more focus on what we call everyday categories, which have inherently a lower average ticket value, but are driving more usage and are very relevant to the consumers. So as we look into the next few quarters, we think that the acceleration will be greater on users and transactions and than on GMV, because I think we will have more growth into the everyday category than the higher ticket category. And so I think that we'll have more growth on users and orders in that respect.
Awesome. So, Spencer already mentioned, Africa being harder for some of these e-commerce players to get in there. And, he mentioned Amazon, Alibaba, and some others. So my question for you is, we've seen speculation by some investors that Jumia could be ripe for a takeover. Have you heard that speculation, and what's your reaction to it?
Yeah, I mean, every now and then you read those things, and it's like, everyone has their opinion about this. We are absolutely, focused on building the business and making it right for the consumers, for the sellers, and for the stakeholders. And the rest, we don't control, right? And it's a bit like sometimes people ask me about the share price. I say, look, we're focused on execution, defining a good strategy, executing it very well. And the rest, to some extent, comes from that, right? So our absolute focus is execution, and take it from there,
Aside from, a possible acquisition, has Jumia been approached, by any of these other e-commerce players for maybe more of a partnership or a joint venture rather than a takeover?
I mean, we have discussions with a lot of players and a lot of partners. You have seen in our shoulders, for example, we have MasterCard. We have also a telecommunication operator in Africa, and also a spirit, manufacturer. So I think we have a lot of partners who see Jumia as a strategic partner for them to develop in Africa. We also work very well with a number of large FMCG, the likes of P&G, L'Oréal, distributors like Carrefour, and many more, right? So I think we are very well positioned to partner with those big players when they think about Africa. And the fact that we operate in those 11 markets and that we have this Pan-African footprint is also very good asset, I would say, to drive those strategic partnerships, because with one partnership with Jumia, you can reach almost 70% of the addressable market. So we like partnerships, and we have many partnerships, and I think we'll continue to have partnerships with the various industry players that make sense for us.
Sacha, I want to ask you about the sales of higher revenue items, right? Electronics, phones declined in the first quarter year over year. Can you speak a little bit? What was behind that decline? I have the chart up on the screen. What was behind that decline in the sale in higher revenue items?
Yeah, I think, look, if you see on this chart, they still represent 37%, right? So for us, they're very important categories. We're not, going away from those, and they're very relevant to the consumers, right? Obviously, in Africa, a lot of consumers, when they have disposable income, they think about, equipping with a new phone or getting a newer version or something like that. So I think those are very important categories for us. At the same time, there's a number of factors. Of course, we're putting less resources behind those, right? So we're putting less promotional dollars, less marketing behind those, because we prefer to put those resources behind the other categories. At the same time, we've had some level of supply disruptions in the market due to the COVID and the transportation issues and so on and so forth. Then you have also some, probably the COVID situation is weighing on the consumer spending. So maybe some consumers are spending less on those categories. So, it's hard to unpack which of those three, but I think there's some reasons behind that. But again, we are quite comfortable behind this because they still represent a good share of the business. So, whether it's 37 or 40, I think we're very comfortable with that. And then our unit economics continue to improve, right? So I think it's something that we drive to some extent, and is also a reflection of the market. But all in all, it's something that it's a trend that we're not particularly worried about.
And you mentioned unit economics there. Jumia is slowly but surely creeping towards profitability. Do you have like a timeline on that down the road? You're getting closer, but you're not quite there yet. Can you speak a little bit to that?
Yes, of course. I think, it's a choice we made a couple years ago because, we had, when we launched the business, the first few years, we figured it out, I would say, right? Like those things I mentioned, how do you do logistics? How do you do payments? Do we want to be 1P, 3P? How do we want to build this? Is it even possible to scale, and so on and so forth? And we made a lot of decisions, and then we spent a few years building the platform. And then at this point, we really made this important decision that we wanted to prove that the business could be profitable as we scaled it, right? And so for us, it was very important because if you just think about scale and say, okay, you worry about profitability, everything will be okay when we are big, then if not everything is okay, then you have a big problem. So for us, we made this choice to say we want to put our unit economics under control so that as we accelerate the growth and as we scale, we are going to have a great business, right? And so for us, it was very important to do that. And, Africa is a new region for investors. Many investors, they're investing in Africa for the first time. And we wanted to show that the model works, right? And to show that the model works. And I remember 2 years ago when we prepared the IPO and when we did the IPO, we were still losing money after logistics. And so people were telling me, logistics is maybe too expensive in Africa. You're not going to make any money, And those kind of questions, until you deliver like we did 4, 5, 6 quarters where you're making money after logistics, the questions remain forever, right? And so for us, it was very important to put this behind us, and so that in the next years, and we are very long term, in the next decades, as we drive more growth, we know confidently that this growth is going to be very, not very profitable, but you know what I mean, contributing to profitability, and that's very important because otherwise you scale, and then you don't really know. Now we know.
Sacha, there's been some discussions of, Jumia Logistics, Jumia Pay, possibly being spun off down the road. What goes into that decision making, and what's kind of the timeline of that process right now?
We indeed mentioned that several times as part of our very long-term strategy, right? So this was to, and we explained that we have built the logistics and we have built payments as businesses, right? And we want to be in a position to spin them off the day it becomes big enough and relevant enough to consider that. I think we are years and years and years away from that, right? But we are nevertheless building those two assets as future standalone businesses, so that if we decide to do that, we are in a good position to do it. And for now, they are still extremely integrated within the Jumia ecosystem, and it's way too early to even consider that. We're talking years away.
Is Jumia exploring any bolt-on acquisitions to expand regionally or into new verticals right now?
Well, we don't comment on on that, obviously. As we said, as I said, what I can say is that we're extremely focused on the core, right? So our existing markets, and we want to drive, accelerate the growth of the usage and so on. So I think we're focused on the core right now, and that's all I can say.
Perfect. So you have the Jumia food segment with some food delivery. It looks like expanding into the quick commerce delivery space as well. Can you talk a little bit about this expansion and what it could mean for Jumia going forward?
Yes, very much. Jumia Food is a very good business for us. It's a very good, we call it a category, if you will. And we have that now in 10 countries, 48 cities, as you're showing now on the slide, is growing extremely well. And it's a business that is extremely relevant to the consumers because, consumers love to use that service. And it's no secret, it's growing almost everywhere in the world. It's growing very well. And of course, a few years ago, we decided, look, if you can deliver a pizza within 30 minutes, right? It means you can pretty much deliver anything. Why could you not deliver, as you see on this tiny screenshot, like supermarket, alcoholic drinks, shopping, pharmacy, flowers, whatever you want, right? Because after all, you've done the hardest. Like if you can deliver a pizza in Nairobi or Casablanca or Lagos in 30 minutes, then the rest should be pretty easy compared to that. And so we started to add more shopping categories to the platform, and we are seeing very good traction. And this is an area that we want to accelerate. I think it's extremely relevant, obviously, for grocery and I would say convenience shopping, which is very relevant to the consumers. And today, on-demand services, this Jumia Food is about 20% plus of our orders, and I think it's going to continue to grow very well.
We've already mentioned a couple times about the African market being, hard to enter with some of the logistic nightmares there. So your logistics business, has been years of work, and you recently opened it up to third parties. So why was this important, and how can it help leverage Jumia's scale into rewarding shareholders down the road?
Yeah, it's as you said, our Jumia Logistics is one of our biggest assets, right? I mean, as you gently pointed out, this was no small task to build, and we recently gave quite some color on one of the aspects of our logistic platform, which are the pickup stations and the pickup points where the consumers can go. And we've got about 20-25% of the orders are going into those thousands of points. The rest is going straight to the home of the people with the last mile. And we've also pointed that quite a substantial share of the packages are going outside the big cities. We have a very big presence in the secondary cities and also in the rural area, which is very relevant for the consumers, because if you think about it, there's even less stores in those regions. So e-commerce is somewhat even more relevant. And we built that patiently, and we reserved it for the Jumia sellers for many years. And last year we decided to pilot and to let both our existing sellers ship some packages which are outside the Jumia orders, and let some businesses which have quote unquote nothing to do with Jumia to put some packages into the system. And we're seeing very good results. We need to do that step by step, because of course we need to protect the Jumia customer experience and vendor experience first and foremost. but it's very promising, and it's something that we count on to drive additional revenues and margins to the platform, right? So we think that Jumia Logistics is a business, is going to be a very successful business, and will generate healthy margins for the company and drive the valuation of Jumia going forward. Of course, right now we're still in the pilot phase, right? So this is something that we're piloting. I mean, at the same time, we've had like we're talking about hundreds of thousands of packages. So it's, it's real and it's happening in many countries. And it's going to develop. But again, as we said during the previous call, we go gradually, right? So one should not expect, one should expect gradual development of this one, but we are going there with very strong confidence.
Chris and I have some more questions, but I want to give the chat some time as well. So if you have a question for Sacha, drop it in chat. We'll try to answer it. Here's one from the chat, or here's two, and they're kind of the same question. What is Jumia's biggest obstacle to growth right now? And if you want to talk specifically about this year, you can, or just overall.
Yeah, I think it's when you think about it overall, I believe the growth for us is driven by the fundamental aspects of convenience, selection, price, and trust, right? This is the magic equation for consumers, that of course they need to trust the platform, and then when they come to Jumia, they need to have selection, price, and convenience, right? Meaning they need to find the products that they need with a very good price and delivered very fast, or at least very conveniently to them. And there's no silver bullet, right? On those 4 dimensions, to accelerate the growth, you need to work on those 4. You need to bring more sellers, more selection, more products. You need to bring better prices, and to do that, you bring more sellers who are competing with each other. You reduce your logistic costs so that you can lower the delivery fees, and so on and so forth. And to drive the convenience, you accelerate the delivery, you create the Q-commerce, you increase the number of pickup stations, and so on and so forth. And then you have an impact. And I would say the 4th one, which I mentioned, is trust. And here we generally have a very good perception and brand perception in Africa. We've published in Q1, for example, we showcased a brand ranking that was done by a third party in Egypt, where we appeared very, very high. And at the same time, it's also a lot of the marketing that we do is very local. Maybe some of you have read in the previous release that we have done that when we asked we did the survey about two years ago now, we asked to the consumers, why are you not shopping online? Right? So some people who have never shopped online, why? And the number 1 reason that came was because I don't know how to shop, right? The second reason was because I'm not sure the products are genuine. And the third one was because I cannot check the quality. So all those barriers, if you think about it, the good news is they're not infrastructure barriers. It's, it's the trust, it's the habit of e-commerce, being comfortable with the service and knowing that you can return the products and getting to understand how you can shop, right? So this is why, all our efforts on marketing are geared towards making people comfortable, trusting the platform, and so on. So 1, 2, 3, 4, price, selection, convenience, trust. This is the magic equation. There's no silver bullet, just hard work on all of those.
And then I want to get one more, and then we'll let you hop here. But what market is most critical for Jumia's success going forward?
It's a very good question, and I think one of the biggest asset we have for our partners, for the company, but also for investors, is the geographical diversification. Right? We are in those 11 countries, and we don't publish data by region, but we have volunteered that Nigeria is about 20-25% of our business, then Egypt is about 20%, and then North Africa about 10 to 15, then West Africa 10 to 15, then East Africa. My point being, of course, Nigeria is extremely important, Egypt is extremely important, but we are truly diversified geographically, right? And this is very important because, of course, when you operate in emerging markets, you face certain macro risks, and the last thing you want is to be only exposed to one country, because if something happens, then your business is very damaged, right? So I think the true diversification that we have is a huge asset. And it's also a big asset towards, best practice sharing, talent, innovation. And we are very centralized in the sense that we have one data platform, one single technology, which is, leverage for all those markets. So yes, of course, Nigeria, I'm not going to lie, is very important. It's 25% of our business, right? But, if something happened, then we would still have 75% of the business elsewhere, right? And that's very important. So definitely Nigeria is important, but Morocco is very important, Kenya, Ivory Coast, and so on and so forth, because at the end of the day, we really are one very integrated group, and we adapt to the local markets. We make it very relevant to the users, but we operate as one. And so, that's what I can say.
Sacha Poingnonnec is the co-founder and the co-CEO of Jumia Technologies. Ticker's up on the screen, JMIA. Sacha, thank you so much for joining us this morning on Pre-Market Prep.
Appreciate the opportunity, guys. Thank you so much.
Thank you.
All the best. Thank you.
And Chris, thanks to you as well. Hope you enjoyed your little time on Pre-Market Prep this morning.
I did. That was a big interview. Shout out to Zoli for getting this done.
Shout out to Zoltan. Smash the like for Zoltan, everyone.
I know there's a lot of fans out there of Jumia. I've been following this company, for around a year. I've been invested in it. So full disclosure, I own JMIA shares. I've been a bull. I like the e-commerce segment in the emerging markets. So, I really like the answers here and, the focus on profitability and getting some new data points from Sacha today. So, great interview, as always, here on Pre-Market Prep.
All right, Chris, we'll see you later in about an hour and a half for SPAX Attack.
11 a.m. Eastern time, SPAX Attack. We'll see everyone there.
All right. Guys, well, we got a lot happening right now. We are in a fast market. I saw that note in chat about Binance halting withdrawals. I don't know what is going on out there in the crypto market, but it is not pretty. In all seriousness, it is a bloodbath out there this morning in crypto. So, this is not investment advice, but take a breath. All right. I mean, this is kind of par for the course. These things happen. These kind of flash crashes in crypto. I'm right along with you in terms of Bitcoin. So I don't know what to say, but it's not looking pretty this morning in crypto markets. But the market will go on. All right. Smash the like, guys, for that interview. Hat tip, huge hat tip to Zoltan. That wouldn't have happened without him. He's one of our news desk / producer extraordinaires at Benzinga. Does a lot of the behind the scenes stuff. Got that interview set up. Huge shout out to Zoltan. Smash those likes if you want to see more CEO interviews. We are trying our best to bring more executives on. If you want to see anyone in particular, drop us a line in chat. Shoot us an email, shows@benzinga.com. Tweet at Benzinga, tweet at me. My handle's up on the screen at SJIsrael. And we will try our best to bring those guests on for you. One last thing I want to promote, and then we'll hop on over to live training with David Green. We are doing a 100,000 subscriber contest. Benzinga is on the doorstep of 100,000 subs on our YouTube channel. We are giving away a free share of Tesla for that contest. How do you enter? You click on the link I just put in the comments right there. It's also in the description. If you missed it, the link is in the description. I'll say it again. Enter the contest. Subscribe to our channel. When we cross 100,000 subscribers, we're giving away a free share of Tesla and some other stuff too, but the free share of Tesla is the highlight. All right, it is 9:29. We are about to open I'm going to get off the stream here. David Green, live trading the open right now on this channel. This video is going to redirect. You don't have to do anything, click anything. It's going to redirect you straight to that stream. I think he's on right now, and I'm going to hop. Everyone smash that like. Please remember, as always, all the information from our show is meant to be used as informational purposes, not for investing advice. Thanks to both our guests today, Sacha and Ivan. Thanks to all of you in our chats. Good luck today. I'll see you guys a little bit down the line for